Bitcoin's unique because no amount of capital flowing into a Bitcoin ETF is going to create any more Bitcoin. You know, what we've got is 900 Bitcoin a day. We're going to go to 450 Bitcoin a day. This will be the halving, but it will be the single most consequential halving in the history of Bitcoin, because you're talking about, it's the equivalent of someone coming in the market saying, I'm going to buy $8.5 billion of Bitcoin a year for the next 4 years, guaranteed. That's the demand impact, right? $8.5 billion, $23 million a day at the current price.
MicroStrategy founder and Bitcoin bull Michael Saylor discusses his predictions for the Bitcoin halving and why he believes $400 trillion is about to pour into Bitcoin. The Bitcoin network just completed the 4th ever halving event, which Saylor says marks the beginning of an absolute surge in price. Bitcoin is sitting just above 63,700, up over 44% just since the beginning of 2024. Saylor believes Bitcoin is about to make history, as we witness the single most consequential event since the creation of the dominant cryptocurrency over the last 15 years. So far, there have been 3 Bitcoin halvings, each reducing the supply of the cryptocurrency by halving the block reward, and all 3 have had significant impacts on price. However, the 2024 halving will be unlike any other, because it comes on the heels of several spot Bitcoin ETF approvals by the US Securities and Exchange Commission in January. With previous halvings, it was expected that the reduction in supply would make Bitcoin scarcer and therefore more valuable. It not only did, but it happened on 3 separate occasions. The story has become even bigger in 2024 because of the Bitcoin ETFs, with thousands of institutional investors across the United States now buying Bitcoin. The demand for the leading digital asset has increased exponentially and more than the daily supply. With the supply being reduced by half, this will cause a never-before-seen supply-demand imbalance for Bitcoin, and Saylor says everything is about to change.
I'm not surprised they're successful. I expected them to be very successful. I think there's 10 years of pent-up demand. They're the most eagerly anticipated development in Wall Street. This is like Bitcoin coming public. It's like the IPO of Bitcoin, except it's like 10 companies simultaneously taking Bitcoin public. Because Bitcoin's a commodity. It's not a security. So the idea that BlackRock and Fidelity and Grayscale and Bitwise and ARK, they're all taking Bitcoin public at the same time is a big deal. The fact that I'm not surprised they're successful as ETFs, because Bitcoin's the apex ETF. The other ETFs are based on oil, like let's say commodity ones, oil, gold, platinum, silver, palladium, market baskets of commodities, natural gas. All of these things are defective as investment assets because physical commodities aren't scarce. Physical commodities can be manufactured in any amount with additional capital and know-how. So ultimately, the best of them is the gold ETF. But if a bunch of money flows into a commodity ETF, that just actually fuels capital into commodity producers. They just dump that commodity on the market, the price gets held down. So commodity ETFs were never that great an idea. On the other hand, comparing these Bitcoin ETFs to the S&P index, the biggest ETF and maybe the biggest development on Wall Street was the launch of the SPDR, SPY, in 1993, about 30 years ago. And the idea that you could create an ETF that represented a market basket of 500 stocks, that was big. And especially that was big because that came along at a point where people had lost faith in the currency as money, as a savings technology. And so they were trying to figure out what is money. And actually an entire generation of people picked the S&P index as money, right? How are you going to store your excess cash for a decade or longer? Not a checking account, not a savings account, not a bond, but the S&P. So the S&P became money, and that ETF became the monetary index. And that's why today, amongst, that's the most successful ETF. If you look at SPY and all the S&P index type ETFs, they have most of the capital in them. But the problem with those ETFs is that stocks also are not conservative. So if I increase the price of the stock by a factor of 10, you're getting more equity. Or if another way to say it is, if I take hundreds of billions of dollars of cash and I buy the ETF, like S&P ETF, the ETF has to buy all 500 stocks pro rata, which means they're going to have to go buy Tesla and Apple and Google and Meta at any price. They're price insensitive, even if they're overpaying. So when they buy it at any price, what they're doing is they're creating more equity because they're encouraging those companies to issue more stock. And then, of course, this is common sense. If the price of your stock doubles, the employees in the company with stock options, they sell the stock, right? They sell the stock option. When they sell the stock option, you put more stock on the market. So the price creates supply. There's a price supply elasticity there. And that's the same as you have with commodities. And it's the same thing with bond funds. When you have capital flows into all those other asset classes, you create supply of that asset. They're not scarce. Bitcoin's unique because no amount of capital flowing into a Bitcoin ETF is going to create any more Bitcoin. You know, what we've got is 900 Bitcoin a day. We're going to go to 450 Bitcoin a day. This will be the halving, but it will be the single most consequential halving in the history of Bitcoin, because you're talking about, it's the equivalent of someone coming in the market saying, I'm going to buy $8.5 billion of Bitcoin a year for the next 4 years, guaranteed. That's the demand impact, right? $8.5 billion, $23 million a day at the current price.